Yes. Yeah, I was gonna say, I'll get out of the way here. Why don't you just, we'll give you the floor and then.
Do I have to
Like,
sit down?
no, you can definitely sit down if you like. Perfect.
So
And we'll just have your folder right here. So
I
you're good to
brought
go.
some folders because I'm a numbers girl. I made it super simple, but I have to look at things, so everybody's got a folder. If you don't want one, you don't have to take it. But
Yeah, that chair was over here.
that's how I did. And in my MBA program, I was like, I'm such a
She just whipped it from 8th grade. I would turn it into paper. There were students that would come in with really nice. Yeah, it's great presentation.
So it is super simple. I understand. So my name's Sarah Jones. I'm an EA, which means I'm a little bit different than a CPA. A CPA is licensed in the state. I'm an EA and I'm licensed with the IRS and I'm licensed in all 50 states. So my focus is a little bit different. I focus on tax, really helping people, and sometimes I do a lot of messy tax stuff, like people that have a big, huge bill that's due, stuff like that. So what I did, we're doing a basic illustration. And I tried to be funny. I'm super a nerd, so I don't know how funny it is. But I did the Tale of Two Knife Ninjas for you guys. Okay? And like, it's super, I broke it down as Flintstone style as I can because I understand not everybody's passionate about this stuff as I am. So,
From Brooks and Dunn.
And my husband did point out to me that Dunn actually has two ends.
We used to have a rep name for it.
Did you? Yeah. He's like, Sarah, that's kind of silly. I said, I think it's funny. So anyways, so what I did is I did a basic illustration. So Brooks and Dunn both, there's one person. So Brooks is the one that needs some help. Brooks is a sales guy. He's killing it. He's doing great, but he's on the 1099. Dunn got a little bit smart. He has some entity set up. He has some structure set up. And what I did basically, if you follow it on the left column, this is Brooks and Dunn making $150,000 a year. And then I illustrated it here where Brooks and Dunn make $300,000 a year. And kind of apples comparing what the difference is. If you look down at the bottom, and I don't know how much you guys want to go into strategy. I can go as surface level or as deep as y'all want. But just doing a couple things, so no longer being a 1099, but setting up an LLC and being taxed as an S-Corp with the IRS, setting up a SEP, doing an accountable plan to be able to reimburse yourself legally with the IRS for some expenses that you're already doing, and doing an the Augusta loophole, which is where you can basically rent out your home to yourself for business purposes and get a free write-off.
What is that called?
The Augusta loophole. It's kind of like sticking it to the man legally. I don't know, but it's completely in the IRS code, and it's named after a golf tournament. I'm not a golfer. The Augusta something. Yeah. Okay. So if you see though, just looking at Brooks and Dunn for 1 year, so off 150,000, and what I did also to just be transparent, comparing apples to apples. This is assuming they're both single and don't have a spouse, no kids, because then it gets kind of
Fair assumption.
right. Okay, so Brooks owed $24,562 worth of tax, and Dunn only owed $8,700. So that right there, a 1 year saving is 64%. You can kind of see it becomes amplified as you make more money, because we have a progressive tax rate in the United States. As you make more, the percentage of tax increases. So if you notice the same thing, the one thing that we did once they reached 300,000, we added a foundation. And a foundation, a lot of people think, so do you know, have you heard of like the J.J. Watt Foundation, Clinton Foundation? This is like the rich people's retirement plan. A lot of people don't know about it because traditionally it's super expensive to start. It's an IRS entity where you can put up to 30% of your AGI into this, and it's a tax deduction. Go ahead. Adjusted gross income. I'm sorry, on your tax return. Sorry.
So on some of these, it's like
we had a financial planner come in and speak earlier this year.
Mhm.
So just like listening to like the financial literacy of the group, like maybe even an S corp or like a deduction, SEP, like the safe assumption that no one.
Okay, well, and we can go as
And that's
deep
your
as you
strategy
want.
part, and I
or-
understand that.
Hi. Hey, I think you're at this table. You're probably doing pretty good. So I would be proud of that.
It's your adjusted gross income.
Yeah. So the one thing that we did, so the difference between the 150 and the 300,000 is we added a foundation because it's a great way when you earn more money to get your income down. You basically divert the taxes you would have paid to the government to your own foundation, and you can use those, one, to give, and then also to kind of fund your own retirement, which is, again, seems like it shouldn't be possible, but it is. It's completely in there.
Up to 30% of your adjusted gross income.
Yes,
Tax on it.
correct.
That 30% would have been given to the IRS no matter what, or that 30%.
You would pay tax.
Well, it kind of depends. It depends on what else you have going on. But assuming all other things equal, yes,
So this is used as a write-off.
right.
Or do a lot
So-
of these,
I'm sorry.
do these all come into play when you start having S corps and LLCs, like most of these?
Yes. So, like, for example, could you do a step right now as a 1099 guy? I think you actually could, honestly.
But most of this is still founded on having a corporation.
Yes. So if you're just a 1099, the first thing I would suggest is to get an LLC and be taxed as an S corp.
No matter what you're making.
What does S corp stand for?
An S corporation.
No,
So-
S doesn't stand for anything.
Self-employed.
It's just an S corp. So
Just S corp. Okay.
yeah. Ooh, I like all these questions.
But there's definitely a need for it in this particular space.
So the fundamental of what she's talking about is we're all self-employed here at 1099. You have a different tax structure than if you work.
So right now, when you guys file your tax return, it goes, you have a Schedule C that's on your 1040, which is your tax return. And it's the worst way to be taxed because you have self-employment tax. So if you can do an LLC and then you elect to be taxed as an S corp with the IRS, having the LLC is a liability protection. It separates you from your company. The S corp avoids the self-employment tax.
So like if you're at the booth, someone drops their knife, they sue you for your house, your car, all your money that you're worth. If you're structured as a corporation, there's like liability differences there. Then play into the tax structure.
So an example of this, guys, I guess, is an umbrella statement too. An LLC is going to be defined as a limited liability corporation, right? What that means is that you can do it as a sole proprietorship, which is your individual, like you're doing this business. But you can do it as an LLC, which like is going to be private. A sole prop is just I'm doing it by myself. You can do it with a joint partnership or anything like that. The reason why that's important, and even when this came up a little bit on top of the service events, is if someone comes after that, right? Just like what James is saying, a corporation is going to give you structure because then they sue the corporation, which then it's really a barrier between the end user and you, even though in the moment you're just fine. What happens with an S corp is that you actually become an employee. Correct me if I'm wrong on any of this.
Nope,
But you become an employee of your corporation. So Ricky Garza finds and files Ricky Garza Limited, right, incorporated, whatever it is, right. As an S corp, you then become an employee of your corporation, right? So that's how you avoid that self-employment tax. It doesn't change anything fundamentally about how you're paid, your 1099 structure, anything like that. What it does is on paper, it creates this entity, this business that now you're an employee from. And therefore, that's going to help you reduce a lot of your tax burden and keep a layer of protection between you and where to go wrong. Does that make sense?
No, because I thought LLC and S corp were two different things.
Well,
You say LLC, file your taxes as S corp.
yes. So you can go to the Secretary of State and create an S corp or a C corp or an LLC. And this confused me for a long time. You then can, the best way to do is to become an LLC and elect to be taxed as an S corp. Because if you go and
Why is
file,
that better than just going S corp?
so if you file an S corp, it's just like a corporation. If you're sued, people can have claims to your corporation shares. An LLC, they can't. So you get the both of best worlds, I guess. You get the LLC, the liability protection, and elect to be taxed as an S corp with the IRS, and you get the self-employment tax.
So when it says S corp, an LLC electing
Well, LLC just picks how they want to be taxed. Like, you
Yeah,
can
so
pick
it's
tax,
personal
but
versus.
my question was more the difference, like, why would it just be an S corp?
Because somebody could come take the shares of your S corp. They couldn't your LLC.
Liability, the limited liability.
The way
Because
that
you don't have shares in the LLC.
right, the way that the entity is set up.
So the whole framework is either yourself, it's a 99 independent, or you elect to be a company, and when you elect a company, for that your CPA.
But the savings are substantial. I mean, it's
I'm sorry.
no. Go ahead.
Say after you're an LLC.
I would never change it to an S corp. I would be an LLC and elect to be taxed as an S corp with the IRS. Now, at some point, if you start making $1 million a year, at some point it makes sense to then be a C corp. But that's kind of a whole other conversation.
On the
Yeah.
solopreneur is a
So what are the benefits? Why would anyone be an S corp?
Why? Because you avoid self-employment tax. Now, are you saying an S corp versus an LLC tax isn't?
Correct.
Never.
I'm saying, why is that even? Why would someone pick that? It is an option.
Because a lot of people
So
don't
what?
know that you can.
What is the there has to be some kind of benefit to it if it's an option.
There's really not.
That's just the ignorance, which people don't know, and
Yeah.
then they just think what they think is the right thing.
My buddy did CPA, the taxes were halfway
Cool.
funds. And he said that if you're an LLC, part of that money is going to, I don't know, I'm going into the waters there, what I'm talking about. It's something about putting money into the retirement LLC,
Mhm.
401k, or part of that money that you're paying towards the government as an LLC gets to put towards your retirement. Is that, do you know anything about what I'm talking about at all?
I really don't. I do know though that being self-employed, you can put money into a retirement plan and it basically becomes a business deduction. Maybe that's what he's talking about.
for
Because
like
you-
Social Security. No, this SEP one.
Right. So like a SEP is where you can put up to 25% of your net income into it, and then it becomes a business deduction on your business. Maybe that's what he's talking about.
SEP is self-employed pension. So it's in the days of pension plans where it used to be whenever you went to work for a company, you'd stay there for 40 years, and after you retired, they didn't have a retirement plan or a benefits package. They would continue paying you a percentage of profits and revenues for the rest of your lifetime, right? That was your pension. And so losing that was a big deal. So SEP wasn't created for people who are 1099s, who are self-employed, to, through their own business, provide themselves that same value, et cetera, right? And so therefore, when you contribute to that, it's basically a business deduction you're holding off. But it's really, you're keeping the money, you're just saving it and putting it towards your retirement.
Yes. So, we're kind of getting, there's probably 20 different options you could do. You can do, you know what I mean?
You want to go like your Roth and stuff first, but when you have that much income left, then you have to start making.
Correct. And there's a ton of different options to do there. Yeah. And really, like when we create these tax plans, it's like right now we're kind of talking cookie cutter for an example. It's really custom built for the person, if that makes sense. So my Brooks and Dunn maybe is not a great example because it brought up like 20 million questions, which is good. But you know, so, but I guess the whole,
Where do you actually start paying?
so traditionally most accountants, most firms say don't do a C Corp until you're making in the ones use, but traditionally it's just because they charge so much to open an S Corp. So it costs $300 to do an LLC on the Secretary of State website. I can do the paperwork with the IRS. It's not, it shouldn't be thousands and thousands.
Questions related, did you walk through each of these line items and what they
Sure.
meant?
And what they mean? Yeah.
Sure, and sorry, you just brought up something. I have no idea how to create an LLC, but you're saying that how much of my yearly, venture that we own my yearly.
No.
One flat rate across.
Oh, sorry.
Yeah, no, that's okay.
So it's like, so it's only $300 tax. You need to go to the government.
That's what we have to pay to the
Now,
Secretary
managing
of State
all
to
that.
create.
Or any other costs. It could be adjusted.
No, so if you do open an LLC in Texas, you have to every May you have a franchise tax report that you have to file. You don't, like to
Got my
think like, oh
comptroller
my
and
gosh.
sales tax today.
So you don't owe anything until I think the threshold is like 150. I think it's every year. You don't owe anything until you make over that. You have to file it. So go ahead. I was going to say you won't owe taxes until you make over that, but you have to file the report, or they can close down your LLC.
The report is just basically, no occasion will do that.
Yes.
So another comments.
So it's very beneficial for you
No, I
to
agree.
walk the line and see what type of song it's, and then everyone does.
Sure. So if you go like, let's start right here on the top left at Brooks and Dunn. They both make 150. I need a pen. I'm like a pen girl.
So 1099 is what you get paid. without
Like
any
how y'all get
taxes.
paid right now. And then an S corp, same thing. Instead of it being issued to Dunn, it would go to Dunn and Co. Whatever he's gonna
Mine is in good, not really good.
patch
So
it.
it's more for the LLC.
So we would do it. Yeah. It would be your company.
Call that a corporation, right? So
Right.
1099 versus a corporation. Are the two options.
So
Your name versus your company. The first one, your name's cutting it. Second one, your company's cutting it. So
So then the second or the third line, I guess, I just put the standard deduction. We're just assuming that he's a single, unmarried dude. So Brooks does not have any stress in place. So where it says Augusta is 0, he's not contributing to that.
what was your deduction?
That's what you get for you being with the
Not the
IRS.
business deduction, that's the IRS deduction. No business expenses yet. You
Right.
just get this random $12,000 off your income for the IRS.
For single, it's 20,000. For married couple, it's 24,000. Right now under the Trump laws, I guess. So
Okay, so what is the business strategy?
okay, so Augusta loophole is where you can, if you have a company, we're assuming that you are doing business in your home. You're having board meetings now. You do not have to have a board. You can have a meeting. It's basically taking minutes, doing business work one time a month in your home. What the IRS allows you to do, you can have up to 15 days of rental income tax-free. What we do, we're a little conservative. We just round it off and say do a meeting in your office once a month. You're allowed to take a comparable cost of what a hotel would be near your home, of what it would be to rent it out for a conference. I always round it up to about 1,000 because it's typically what it is. Those are expensive. You're allowed to take that as a deduction on your business. So if you see Dunn here has a $12,000 business deduction for using the Augusta loophole.
And that's renting your house back to your business.
Yes.
High level.
Now, and just to be technical, it actually is income on your personal tax return, but you get a credit for it because it's underneath the threshold of what the IRS allows.
$5,000 a month to rent out your home office.
So
Yourself for one board meeting.
You're getting a business deduction of $1,000 a month. Correct. Yeah. Does that make sense? Okay, so the next one is the SEP. This is your retirement plan. They allow you to put up to 25% of your income back to this. So what I did is I took Dunn here, who made 150 grand over the year. Now, and here's the thing with the SEP. You can fund it until you file your tax return. It's the only vehicle that's like this. So let's say, for example, you filed an extension. You have until October 15th of 2019 to file 2018, correct? Okay, so you could, go ahead.
Write down your question.
You could fund a SEP if this is what Dunn was going to do. He took 25% of the income he made last year. He's going to put this $25,500 in there by October 15th of 19. It could qualify for a contribution to his 2018 SEP
25% of
of the net income
Net
on your
income.
business, right? Are we good on that one? That'll be a question. So the next one's an accountable plan. What this is, an accountable plan is something you have to have it set. It has to be in writing in case you're ever audited. It has to be done right, or it will be disallowed and it will become income. So right now, when you go and kind of think of the most common example for gas, your vehicle maintenance, health insurance, anything that you end up purchasing on your personal account for things during the month. If it's business related, as long as it's done correctly in your accountable plan, it becomes, you can reimburse yourself for it. It becomes a business deduction, and that money flows through back to you as a tax-free flow of cash. Okay?
Similar to the business write-offs?
Yeah,
I've never heard about the accountable plan.
it's an accountable plan. And it has to be done right. A lot of people, like right now I have a client, it's a partnership that I'm actually doing some forensic work on them, and they had an accountable plan, and they would reimburse themselves, I think like $600 or $700 a month, every single month for their car expenses. They didn't have an accountable plan, and it's all considered income. It has to be done. IRS really.
So accountable plan is just your write-off for doing business, whatever you're paying yourself. Like if you have someone that works for you, you give them a set amount, like writing off the expenses they have while they're working with you. So
No, it's stuff that you would do personally.
It's a personal income.
Yes.
If you're choosing to do it as a person versus your business.
So you say,
Or they just gas.
Gas, mileage. Some people elect to reimburse themselves for mileage as they do it through the year instead of take the mileage deduction at the end of the year. Things like that.
I had to suppose the car as a vehicle, business vehicle.
Right. The vehicle that you use for your business.
Yeah, we just bought it under the business.
Oh, well, that's perfect. So you don't have to do anything. Yeah. So the next one is a foundation. And if you notice on the left side of the 150,000 earner, I didn't even include it there because it's more of an advanced strategy. I really used it for when Dunn is out there selling a lot of records and doing good, I guess. Like I said, the foundation, you can create it and put 30% of your income in it per year. It basically, all the funds in there become your own retirement plan. In retirement, you can be employed and take a reasonable compensation from your own foundation. So it's kind of like you're taking your taxable income now, diverting it to a foundation legally, and then using it as a retirement plan. And to do some legacy planning, and if you have passion and want to do, you are required to give away 5% a year of it. So it is, you do have to have a heart for giving or for wanting to create something bigger than yourself, I guess. Go ahead.
5% of the heart.
5% of the
5% of the
5% of what's in your foundation.
every year has to
Every
go.
year. Yeah.
Not to yourself.
Not to yourself.
So, and forgive me because I said that you take part of your income, put it into your foundation, right? And then once you start pulling money out of the foundation, you say that was tax exempt at that point?
No, it's not tax exempt. You would become an employee of the foundation,
Okay,
basically in retirement. So let me be clear.
But so the tax on that is still way better than the tax.
Because in theory, you're going to be in a lower tax bracket.
Right.
Yes.
Right.
Let me be clear, though. You can't take the money and put it over there and then take it right back out.
Right.
It is designed to sit there. It's a long-term vehicle.
Yeah.
So you get 30% tax write-off. Like, why not? I mean,
When are you allowed to touch that? And what's certain things like certain ages?
There's not stipulations like typical retirement plans are. And I will say, I've seen it. If some things have come up, if you need an operating loan, you can take a loan from your foundation, but it has to be written up correct. There has to be an actual transfer of cash, and it does have to go back. So you can use it and you can get it if you need to, and there's no penalties on that. But you can't. Some people think, oh, I can just go start this foundation. I'm gonna put the money there, and then I'm gonna take it back, and that's not what it's for. It's more of a long-term thing. I don't know. I've actually never had that question. I can find out though.
Where did it become a mission? Is it like actually becoming a charity, or is it just like what I'm asking is once you start this foundation, you hire people to work in the foundation.
Absolutely.
It becomes like something that you decide. And then what if your foundation hires you? Is that possible? Steve Jobs started Apple and he fired him from his own company. Is the foundation grow to something beyond you?
I'll be honest, I have no idea. I think the intent of it, I mean, a lot of people do it just for tax savings, but most people do it because they have some type of passion or something that they want to set up that will outlive them. My husband's a pastor. Like, we have a heart for ministry, and we don't have a foundation, but we would make one, and that would be what it would be for. So that when we're gone, we have something that kind of outlives us. But we would use it at the same time as a tax deduction and be employed by the foundation in our later years. I mean, it makes sense. And that's awesome because it's a hybrid of everything, like true to what you want to do, and to reap the financial benefits of it as well. Beautiful. So that's what that one is. Okay, so going back to the left side, we see that the taxable income for Brooks, basically all this is 150, 1099 minus his standard deduction. With Dunn, he has all these business deductions here. So his taxable income is $76,500.
By the way, what's not showing on there for you guys as salespeople is all your expenses, like your shows, your booths, your mile, like all your other expenses on top of that. So that you're gonna like all your deductions plus that. Then you have your taxable income.
Right.
For those who don't, and some people don't know this.
You lose that standard deduction.
So
Nope, your standard deduction is right.
You could add on there.
1099 when
You
you
could
take
add
your
on there
business,
foundation.
You don't
all
lose
of
the
that.
standard.
So once you got all of that,
Yeah,
then
you still get that.
That under foundation, and this, and doesn't know anything at all, you can just make a little note and all business expenses.
Right.
So you're looking at, so just know that.
And you would get that no
After
matter
all
how you're
that,
set up. Yeah, as a 1099 or on an, you get all of your business deductions. Yeah. So if there are 30 grand, you would take 30 grand off of your taxable income, or for anybody. So Brooks, since he's on 1099, he has self-employment tax. So it's 15.3%. So that's what this $21,114 is. You technically get a 50% credit back on that. So I added that back in just to be technical and precise. So really, Brooks's income, his net taxable income is $148,557. And again, like she said, this is assuming no business deduction, so it could be skewed some. So he would owe $24,500 on tax. Now, Dunn does not have any self-employment tax. He's elected to be taxed as an S corp with his LLC. Can't read upside down very good. So his taxable income is $76,500, and he would owe $87.99 on that.
What's the 50% credit?
So on self-employment tax, the rate is 15.3%, but they give you a 50% deduction add back in. So technically, the tax is $21,000, but you get credits back in.
You have to pay the full 15.3 out of your pocket, but then they're going to give you a 50%.
They give your credit back for half of it. No, on the same year. It's just, yeah. It's like a net of half of this 15.3.
But it has to come out of your pocket and be paid. Then they give you a credit for half of what you paid. Yes.
No,
They don't make you pay more.
I really could have just netted it just to be correct. I just split it out the way that it's done. But the main thing to know is that on a 1099, you pay self-employment tax, and if you elect to be taxed as an S corp, you do that.
Guys, just to give a little bit of a frame for this too. First of all, like the number of questions that are coming out, this is obviously was much needed, and Sarah, you're awesome for being here. And thank you. Just so everybody's aware, we have Izzy speaking to us at 3:15. Sarah, I can't like her name the latest, but you need flat. After our next, we got probably 2 more minutes now, but would you be comfortable hanging out and answering
45 minutes from now?
Probably, sure. Yeah, probably around 4 o'clock or so, somewhere in there. Unless they just render it a little bit. That'd be, by the way, thank you so much for making that all the way down here. I really do appreciate it.
For me, personally, a lot of clarity. So
Good.
thank you
I'm
so
glad.
much.
Cool. Well, guys, why don't we do this? Why don't we transition to Disney? Well, Sarah, let's give Sarah a round of applause.